Let's get going. Another video. It's Tuesday. I'm having a great time breaking down the charts during my vacation. I'm really glad that everyone enjoyed yesterday's video. So I'm going to make another video just like that. I'm going to expound a little more on the charts. It's going to be a long one. I can already tell. I have no idea what I'm going to go over entirely, but I know I'm going to start by saying thank you to my Capavision subscribers. You guys are awesome. You're really keeping me here, pumping out the analysis, vlogging my thoughts. It is a tremendous support that you guys are giving me, and it's only $1.99 a month, and I really do want it to be just like, you know, a couple of bucks. Really easy. It's not going to break your bank, and for me, if I can produce enough analysis that enough people care, it could actually turn into something I could do for supplemental income. The dream, of course, is to do it for a living, but I'm just not going to think about that. I'm just going to keep on going. Thank you for your support. Yesterday I had a comment, and I want to kind of talk about it. Damiza Presents says, Cap, you the man. I don't envy trying to figure this all out with all the market manipulation and chart mess with all the different cost basis stuff. How do you decide what to use with all this crazy influence? So I think what we're trying to get at here is how do I do the analysis? And then, you know, there's some questions about the shorts. Are they going to hedge and explode? So here's the thing is the short interest is so high right now in the markets because we've reached a really big top. I mean, really big top. So the shorts will actually probably end the corrective cycle by closing their positions when that happens. I don't know when that happens, and shorts don't really have to close if you understand how the DTCC's warehouse works. They have failure to deliver warehouses. So if you fail to deliver shares, you can just say, hey, can you warehouse that order? And the clearinghouse says, yeah, no problem. No problem. We'll just put these failures over here in the warehouse in the box way back there in the back, dark little corner. And, you know, when you want to close those positions, let us know. And then the clearinghouse just provides the shares to the party that didn't receive their shares. And, well, that's how the float of a stock becomes entirely irrelevant. But when the short interest begins to close at the bottom of the market, when the shorts take profits, I think that's really what's going to catch the market. And so while we spend all this time vilifying the short sellers, eventually we're going to be thanking them. And that's why I'm not big into the whole short squeeze Moaz theory. You know, I don't want to build any animosity towards anyone, especially Ken Griffin. This is one of the most powerful people in the world. So I don't feel the need to go rattling his cage. I really don't. Leave people alone. In general, just leave people alone because, okay, now here's some philosophy and some theory. I'm even on this screen anymore. Let's change the screen up. I'm just talking. But I think, really, there's nothing more dangerous than moral high ground. If you believe you have the moral high ground, then, well, that can lead to justifying means that are immoral themselves to reach whatever end you've placed on that pedestal. So I believe that's why they say the road to hell is paved with good intentions. Well, let's get into the analysis. That was a little longer than I wanted to. If you're not subscribed to Capavision, you should subscribe, and you're going to want to after you see this. I'm just going to go over this brief overview. American Eagle Outfitters has earnings today after market close, I believe, 30 minutes after. And so I do have some analysis, and I have that pulled up now. You're going to see a big motive wave up and a big motive wave down. And this is kind of just like a crude analysis. I just quickly threw down some different consolidation patterns I saw and then slapped on some motive wave labels. I mean, at the end of the day, you know it's a motive wave because, well, it fits really well inside of a channel. You get a channel, great. And when you break out of the channel to the downside or the upside, you're probably in a 3 or a 5 wave extension. So this worked for me just to say, hey, I'm in a motive wave, and I wanted to figure out what my waves were of superior degrees. And so I had to back out and do this. And when I did that, I decided that, hey, this was a cycle wave 5 that brought us to this low in 2022. And so we have now been moving through a corrective 3-3-5 pattern, which means we have A, B, C, or let's see here, A, B, C, A, B, C, and now we're working on that 5. And this doesn't make a whole lot of sense, and that's okay. I just wanted to just slap that down because this is where I want to spend the most time, is actually on an hourly chart. And the reason is because this is where I really started to follow American Eagle Outfitters price action more closely, was back towards the end of July. And there was, let's see, when was their last earnings? Back here? When was that? Jeez, I can't remember. Wow, was it really back in May? where we saw the price go from 14 down to like 12. This was a massive decline, and it made me mad because I bought calls and I got wrecked. That's okay. Maybe that was over here, but there's no, it was on like an earnings and it wasn't the dividend. At any rate, the price did plummet, and it had to be back here. I can't remember why, though there's not like an earnings announcement there. I did get burned pretty bad, and then I doubled down and I played this rally up to 13, and I took profits up here, and that was really good. And then price dropped, and I entered again and took more profits somewhere up here, and there's a little more upside that I didn't take, but I ended up making money trading American Eagle Outfitters earlier this year, and I did it by using my Elliott waveform analysis. And if you're familiar with my American Eagle Outfitters Elliott waveform analysis, you're going to realize very quickly that this is not the count you're used to looking at. And the reason that is because I typically start my analysis just on the sub-minuet, the minuet, and the minute degrees, and I do that because they're familiar, they're easy, and generally I don't want to be digging too far down into the degrees, the inferior degrees. So for quick dirty analysis, I just like to use those three. But I have this larger analysis now, and what I've done is I've correlated the analysis I've done on the smaller time frames with that larger time frame analysis. So I now have a complete set of Elliott waveform analysis that is congruent from the, okay, here we go, Cap. What is it? The blue 3s and 5s and 1s and 4s that are in parentheses, these are intermediate waves. So I've got intermediate waves through, and I believe those were super cycle waves on the last chart, all figured out. And that's huge. So what I'm going to do now is I'm going to go through this at the intermediate and primary degrees, and then I'm going to go through and I'm going to break down this chart even more through this motive wave to really just drive the point home of what a motive wave is and how we can use these kinds of waves in our analysis and understand which way price is moving. So here we go. We have a 335, and this is the second 3, and I have those labeled as cycle corrections A, B, and C. The first thing you're going to notice is that I have A like back here. And that's because that's actually where the top of A is at the top of this motive wave, which I have shown here in primary wave 5. So that means that this correction down to B, this is some sort of expanding flat. And so you're going to notice I have a megaphone drawn here. In Bulkowski chart pattern analysis, we'd call this a megaphone. And I don't even know what the price target would really be, but I could go ahead and calculate that. And let's just do that. I already have a page up here, and I already have Bulkowski's website. I'm sorry that his website just burned your eyes. There's nothing I can do about it. Mr. Bulkowski, please, if you could make this into like a dark mode, that'd be fantastic. So I'm looking for the megaphone pattern. How about broadening tops? Is that a broadening top? I guess so, because it comes after a motive wave heading higher, so we can analyze it like that. So here we go. What's a broadening top? He goes through and we get identification guidelines, which is cool. You have to follow these very carefully in order to use these statistics. Otherwise, you might not get a result that matches the testing parameters, and that would lead to some chaos. So here we go. We're going to say trend lines, okay, top slopes downward, bottom slopes. Okay, yeah, great. We get it looks like 5 touch points. You got to get 5 touch points. Ideally, the second of 3 touches will touch instead of coming close to the trend line. Okay, nothing's perfect, so just remember that. Price should cross the pattern from side to side, filling the area with price movements, leaving white space. You can't see that here. There's white space between each of these touches, so you don't have like the price just grinding along one side. He says breakout can occur in any direction. It's upward 60% of the time, which is kind of interesting because he calls it a topping pattern. And it happens when price pierces a trend line or moves above or below the end of the pattern. Great. So measure rule. Compute the difference between the highest peak and the lowest valley B in the pattern to get the height. Add the height to the pattern's top for upward breakouts. That works 66% of the time. Okay? Catch that. At the height to the pattern's top for breakout works at the height. So yeah. So we got a 66% shot of just taking the full height of the pattern and adding it to the top, which is really good. Let's just do that really quick. So when you do have an instance of throwover like that, I don't know if I should be using that or not in my analysis. So what I'm going to go through is just get my 5 touch points. And yes, I'm excluding this wick back here. Let's zoom in again. Is that too close? That might be too close. That's okay. But this wick, I took it out. When you do Elliott wave analysis, you're really supposed to be using a line chart. And so if you use a line chart, you can see that, you know, these touches become a little cleaner and maybe the breakout's a little lower. So just temper your candlestick analysis with line chart analysis. The difference is that line chart's going to be on a closing basis. And so the candlestick patterns, actually the candles here give you more information because you see the open, the high, the close, and the lows, not just the close. So you just remember that. It's important when you're having a moment of doubt in your chart pattern here because you have a wick or a candle that's not fitting the way it should. Try the line chart. When you get really good at reading charts, you don't even need the line chart anymore because you just see the closes. You know where the closes of the candles are. So let's find our 5 touch points. We'll say 1, 2, 3, 4, partial decline, and then it's like, woo, upward breakout. But look, it came back, right? So this is called a partial decline when the pattern fails or the price fails to cross the pattern the whole way down. What's super cool here is you're actually going to see that this was 3 waves, right? And we're coming up for 4. And then in a motive wave, we would have looked for that 5th wave to come down and touch. Incredible, right? And right here, we don't want to see an overlap between the 1st wave and the 4th wave. And, well, would you look at that? It completely obeyed that until, boom, all of a sudden it didn't. It just started rocketing upwards. That is what you call reversal. and that commonly happens here after you have an ABC corrective move down. And then a pull higher is you get a signal very shortly thereafter, and it looks like there might even be like a very small leading diagonal triangle through here. I don't know. We'll have to break it down and have a better look, but this is cool. 1, 2, 3, 4, and then nope, no 5, just pure gains. I can't quite know how you would know that would happen, but this support here would be a pretty good indication. That's a big tail. A couple of big tails. Pushing up, pushing up, pushing up. And then these hashes here, these would be after hours or pre-market. American Eagle Outfitters doesn't trade much in after hours, but I put it on there anyway because sometimes it's good. Anyway, so we had this partial decline to breakout, and this was now a bullish move higher, and it confirmed an upward breakout target. But look, the price came back down. This is called a throwback. Let's see, almost on all of these, we have some instruction here or details about throwbacks and pullbacks. Here he says that it hurts post-breakout performance, which is not great. Here's the thing about partial decline. He says that works most of the time. And so I don't think he gives us a percentage here of, he even gives us bull market performance over the decades. Yeah, he's been doing this so long that he now has how these patterns are performing over decades of time. And so the upward breakout appears to be, not doing well in the 2010s. I think that's cool. But typically he gives us a chance of throwbacks and pullbacks. Here we go. Throwback and pullback rate, 67% on each side. So as soon as we did have that upward breakout, there was a 67% chance that the price would pull or throw back into the pattern, which it did. And it actually came all the way back down. And then I'm saying the end of that dip gave us our last touch point in this pattern. But 1, 2, 3, 4, partial decline, breakout, 5. I'm calling this 5 over here. And so what I'm actually going to do is I'm going to use the entire height of this pattern from this high at the throwback, which, by the way, reached a perfect Fibonacci extension level, which I don't know where this is from. I really don't. It looks like it's back here. Check it out. So I took this height of this first motive wave, and this is down to the penny. This isn't going to be like rough. This is down to the penny. I took that height and I said, all right, let's take 161.8 because that 161.8% retracement level, I've had tremendous success watching that level, which is weird. I don't like Fibonacci extensions because, I don't know, it doesn't feel like science, but you can't argue with results. You just can't. You can't argue with results. That was the whole point of this vlog, was to get some results. Does chart pattern analysis work? The answer was yes. And then it was like, okay, is MOAS real? And then it was like, no. The price is going down, and then it went down and down and down. And I'm talking about AMC when I talk about that. Yeah, I sold at, I think it was like at 55 and at 26, so my exits were pretty good. That's neither here nor there. So let's get back to the first thought, which was let's take the entire height of this pattern. And, you know, I don't want to do this dirty. Let's do this clean. So let's take this highest high here, and I need to move my little calculator so I can see the high box. at 1298. Okay, so 1298 minus, and let's take this low, 1141. Is that really it? That's not like a huge range, is it? Oh, it's not. And let's just add that to the breakout price, because that's going to be the percentage meaning price target. Now, where is the breakout price? Because we had a breakout and a throwback, and then we had to push higher and a breakout again. But it looks like that 161.8% retracement level at 1297, that just seems like a good technical level. We'll just add it to that. So we'll say, hey, that's going to be our breakout. 1297, and we get a price target of 1454. How high did we rise? We got up to 1418. Not bad. Not bad. So how far off was that? 1418. And we got a 36 cents miss. That's not bad, though. It's really not. It's really not. And if you're expecting poor performance because of a throwback, excellent. Excellent analysis. Yes, that is chart pattern analysis at its finest. That was a demonstration of how to use Bulkowski's chart pattern analysis in conjunction with Elliott wave analysis. When you do both, you get extremely powerful results, because these price swings were nuts. I mean, especially after this dip. Look at this. I mean, at this point, you're probably feeling pretty bad, right? But guess what? That's where the buy was. That was the third touch point of this megaphone. And as the price started to rise, if you bought into it, you were blessed. And I did buy some more down here. I actually don't know where my buys and sells are. I wonder if I can get those to show up really quick. General, can I show my orders? Did that work? It's not showing my orders. We're going to try one more time to get my orders up here, because there we go. Show trades. What did I actually do? It's not on here. I know I traded American Eagle through here. Think or swim is dumb. Maybe it has to be like on the daily. Yup. So I've done a lot of American Eagle trading, I guess. I wasn't always so good at this. Sold 3 here. Sold 100 here. That's cool. I bought some here. But I wonder, how was I selling 100 shares at 31? It's not like I shorted the stock, although if I did, that'd be great. Then I bought a bunch, and oof, that's not great either. I don't remember trading American Eagle Outfitters that much, so and I'm not as good of a trader as I am an analyst, right? So here's the thing: I bought 100 at 12.24 and 100 at 12.36. And I sold 100 at 12.48, and I sold 100 at 12.58. So let's see here. That was buy at 12.24, sell at 12.58, buy at 12.36, and sell at 12.48. So I made some money here. Not a lot, though, right? Let's see here. Here I actually I lost some money here on that one. Interesting, huh? So, my trading this is why I don't trade very much. It's just, the analysis is what I'm good at. And I'm not very good at playing against myself, which is what trading is about. But I did correctly buy and sell at the bottoms of these motive waves, and I sold at the tops, which is pretty impressive. I was pretty happy with that. I haven't been doing this all that long. My channel's not even a year old yet, so I think I'm doing pretty good. I would say anything that I've analyzed, I don't know, before probably March, April, May. I think this year, the last 6 months, I would trust my analysis from the last 6 months, and then I would start being a little more wary moving back, because this is about my progression, right? So it hasn't always been just like stellar analysis. Sometimes it's been really bad analysis, and if you go back far enough, my analysis was as bad as anybody on Reddit. It's been a long journey. Right now, I don't have a position in American Eagle Outfitters, but I would like to. This is a great company. And, I mean, obviously, we can see the potential for a double bottom through here, right? And because we did definitely get an extension on the way down from the highs at 43 or something like that, it's very possible we get a massive rally later. But I think that's going to come once the markets in general find their next bottom. Could that have happened? I mean, if CPI data comes in good, yeah. But probably not. Probably not. I'm skeptical that the bear market's over. Very skeptical that the bear market's over. Okay, so there you go. Let's keep going. So what's this bigger pattern in yellow? Well, this is the 335, and you can actually see that right here at primary wave 3. That's this guy. That's where we had our breakout. And then we had to pull back. and then the move continues lower. So what's super cool here is the motive wave and the corrective wave forms, they share the first 3 waves. And in each, the first and third waves are going to subdivide into motive waves. So what that means is you're going to see these little blues. These are the wave counts of the waves larger than them. So they're subdivisions. So this could be primary wave A instead of primary wave 1, primary wave B instead of motive wave 2, and then primary wave C instead of primary wave 3. And that would have been the correct way to chart this initially. Motive, corrective, motive. But you don't know you have a motive wave until what? Until the 4th wave gives us a signal. The 4th wave, the mighty retracement. So let's go ahead and dive in a little bit here. Let's blow this up. And now that we're kind of in here a little bit, we're going to go through this more clearly. So dive, bounce, dive. And the cool thing is that there's actually going to be more analysis to be done through here because we can continue to break this down, and that's what I want to do. 4, 5, 1, 2, 3, or is it 1, 2 after hours hash? Then that's 2, 3. Correct. And then we have a motive wave down for 2. 1, 2, 3, 4, 5. That's a truncated 5th wave because it didn't go further than the 3 wave. Do you see how that works? What's super cool too is that this level of horizontal support and resistance that occurred there, that actually kind of defines the, that's where the first primary wave ended, was right there. So like pull this up, clean that up. See that? This low at 1274. That was our 1 wave, right? And now here's the problem, because as we end that first motive wave, the corrective bounce for 2, and we start 3, 1, 2, 3, 4, 5, 5. See, this is a big extension. This is a 3rd wave extension. So you have 1, you have 2 at that peak, come down for 3, and then 4 is like a hiccup. Oops, don't move the channel. Move the call out. There it is, 4, and then 5. And see how 5 breaks the channel. That's okay, overthrow. Or here it's an underthrow. This is good, very good. And actually, something I've been totally ignoring, even the last video, is I totally neglected to analyze the RSI. But you're gonna notice that at the extremes of motive waves, that the RSI is also at extremes. And once you get really good at this, you're gonna start looking for implied volatility correlation swings along with your motive waves and in conjunction with your RSI extremes as well. So really I'm just doing like the basic wave count stuff, but there is still more depth to be had here. There really is. So seeing that there's a problem, and that's when you have 3 coming up and into primary wave 4. You're going to see that I have this dashed line, and that's the top of wave 4. And actually we don't have a problem at all. We really don't. Because waves 4 and waves 1 are not supposed to overlap in a motive wave. They can, very briefly, because plus or minus, nothing's perfect, but like they really shouldn't. And actually, that was the basis upon which I decided that this 3rd wave coming down was an extension. Because after we finish here, I'll go through it again. So we have, these are intermediate waves, 1, 2, 3, 4, 5, and that completes the first primary wave. And then you had 1, 2, 3 to complete the second primary wave. And then we had 1, 2, 3, 4, 5. And this could have been primary wave 3. This is how extensions work, okay? Is instead of saying that's the end of that wave, we start a new count that subdivides. I need to turn off notifications, don't I? Jeez, that's gonna be annoying. Gotta make sure nothing pops up. So instead of saying that this is the end of primary wave 3, we say this is actually an extension, and so this is the first wave of 3. There's 5 waves of 3, and this is the first one. And the reason why we say that is because if it were not the first of 5 more waves of a subdivision of the primary wave, then the 4 wave would be up here, okay? And what's the problem? That the extreme of wave 1 has been pierced or exceeded by the retracement of wave 4, and that does not happen. And so right when that occurs, you got to say, okay, well, it's got to be an extension, and just start charting it that way. And that's what Frost and Pretcher say to do. They say just do it. It's gonna save you a lot of heartache, and it does. And then sure enough, 3, 4 forming that perfect move, overthrow at wave 5, beautiful, coming right to the 4, then primary wave 4 coming right to the bottom of the wave 1, beautiful again. And so you have this fantastic third wave extension through here. From the start of primary wave 1, you have 1, this is intermediate, 2, 3, 4, and 5. And 3 here is not the shortest wave either, 5 is. So it works. It works. I like it. In fact, let's just do a little bit of, let's just double triple check, because 3 can't be the shortest wave either. So this is the peak of the 4 wave, and this is the bottom of the 5 wave. And I just want to make sure that the 3 wave is taller than that. So I place the bottom down here, and I say, hey, where did this start? It started higher. So 3 cannot be the shortest motive wave in a motive wave. Or the third wave of a motive wave can't be the shortest wave. Waves 1 and waves 4 should not overlap. And then there's more stuff too, like wave 2 can't completely retrace wave 1. And just those 3 basic rules will get you going. And you combine that knowledge with how to use channels, and you're good. Like Andrew's pitchforks with Elliott wave analysis, oh my goodness. Something else I need to deep dive into, I guess. And so here we go. We have that 4th wave retracement, and we begin wave 5. 1, 2, 3, 4, and 5, bringing us down, over or underthrowing the channel a little bit, and now we have a little ABC correction on the intermediate time frame. And in an intermediate wave, actually, this is going to be a capital A. And I know this might not mean anything to a lot of you yet. And if you look through my old Elliott wave analysis or my aging Elliott wave analysis, you're going to see that I don't do the notations correctly very often. And I'm working on fixing that. And that's why I'm doing this whole video. It's to say, hey, I have American Eagle Outfitters from Super Cycle to primary figured out. And now we're going to go and we're going to do one more set. We're going to do one more. We're going to break down this third wave extension. Let's do it, because I can see the motive waves through here on a smaller time frame, and I want to do that. So let's see. We want to start from 8:19, and we want to go down through 8:25. So let's see here. 8:19 through 25. First thing we're going to do is we're going to start a new drawing set. We're going to create a drawing set. And if you are ever writing Capivision, it must be spelled thus. $, Capivision. Yes, Capivision. And let's see here. The highest degree on this chart is that I'm going to draw. It's going to overlap with, I'm going to be putting the intermediates on there. So I think I want to go minor. I want to say minor. I have too many charts. Even charting as long as I have, or do as much charting as I do, you get all these crazy long charts. Okay, so now it's blank. First things first, let's redefine our channel here. Yes, I like it. And I like it. Okay, so there's our channel. Purple is fine. Let's find 8:19. It's right here. Okay, so we're gonna 8:19 to 8:26. Okay, it was 8:25. I guess we'll find out. So, I might even break this down even further. Do we really want to go into the 1 minute chart? We might. 1, 2, 1, 2, 3. 1, 2, 3, 4, 5. A, B, C. You see what I'm doing here? I'm already starting this count. So let's just go for it. Let's just go for it. And so we're saying that this wave, this was the top of God, what was it? I have to look. Cancel. Go back over here. Capivision minute. This was primary wave 2. Primary wave 2, and then we ended that 1 there. So I'm going to try to remember that now as I switch drawing sets. I'm just going to do myself a favor and put down the intermediate 1 first. Okay, and this is the live charting portion. Someone mentioned live charting, and I was like, yeah, I could do that. Okay, so here we go. How does this check? Well, first thing we're going to do is we're going to get our primary, intermediate, minute. We're going to get minor. It's minor. Did I write minute on the drawing set name? Okay, good. Minor. Yeah, minor. Good. There's too many details. This is why I don't do it live very often. The details are actually very hard for me. So let's go for 2. 1, 2, and then let's do 3. Easy enough right there. Edit this, delete 3. And we can do a quick measure here just to see if wave 3 is longer than wave 1. So I'm going to take this guy. I'm going to say, hey, let's take you down here. And here you go. Here's the thing. Do you see how this is the height of wave 1. And I don't like that it's purple with everything else. So we're just going to make it yellow because that's the degree I'm measuring at. It's yellow. Here you go. So when you have wave 1, a supposed wave 1 and 2, and you come in and you're having a third wave, the first thing you want to do is say, you know, this height, measure this height and compare it. And when it's too short, you should right away just start looking for an extension. So this would be like 2 of 3. So it would be minute wave. And I put a circle there because the degrees are divided into 3 tiers. Each tier has 3 sub-tiers. And the top sub-tier is in a circle. The middle sub-tier is in parentheses. And the bottom sub-tier doesn't have any. So I can't think about it getting dressed. You know, this is our fully dressed sub-tier. And at the level we're currently at, we're going to leave the Arabic numbers and we're going to go into Roman numerals. And these Roman numerals are lowercase. So that is how we say minute wave, right? Because we go subminuet, minuet, minute, and then it's minor. And this is a minor wave, and this is an intermediate wave. Okay, it's labeled correctly. Yes, it is complicated and it is hard. It took me a long time to get it down. Jeez, the annotations are hard. So we'd say that this 3 waves breaking down into 5 more, right? And we would just continue in that thought. We'd say, okay, there's retrace 1, and then, oh, what happens here is we don't get a new low. Right? We don't get a new low, and that's problematic. So we're either going in for another extension, which would be silly, right? And if we did, we'd be looking for some sort of like triangle through here, but that's not the case. But as soon as you get that bounce, that's not great. It's really not great. 1, 2, 3 is shorter. 4. Yep, that's 4. That's 4. So that is kind of there are 2 concurrent counts here that you kind of want to have. The first thing you want to do is you want to say, hey, always just make sure you're not going to miss a third wave extension. All right. In which case you want to start breaking that third wave down. And actually it's not 1, it's 2. It's the push higher would be corrective. Yeah, this actually, because in an extension, what happens is that's not really the bottom of wave 3, is it? No, it would be the first of that 3 wave, and wave 3, and then the end would be somewhere off in the distance, right? But as soon as you get this bounce here, without setting a new low, that is a huge thing. That is a big thing. So right then and there, you want to say, uh-oh, this thing could go higher, and maybe that is wave 3. And if that's the case, and if this is wave 4, and wave 3 can't be the shortest wave, then wave 5 has to be even shorter than wave 3, because wave 3 just can't be the shortest. And wave 3 was already shorter than wave 1, so wave 5 has to be even shorter. And sure enough, it was. And it's actually very short. Very, very short. So I hope that this is understandable. I know I'm kind of jumping around a little bit, but this is kind of how the thought process works when I'm doing it. So yeah, there you go. Even shorter for a little 5 wave. And what we call this is a truncated fifth, because it didn't pass the bottom of wave 3. And you know what this is. You know exactly what you're looking at. Yes, a double bottom. And that is what forms a double bottom. Truncated fifth wave. It's an expression of a motive wave that fails to reach its target. Failure to rally or failure to dive is a signal. And that's how we find levels of support and resistance. And so, nice double bottom through here. Now, if you're me and you're day trading, the way I like to day trade, I haven't day traded in a bit, but the way I like to day trade is I like to take the incoming peak to the recent peak, and I just draw a line through there. And then I say, this is your buy entry right there. If you know what you're looking at, there's your buy entry. And then you get this nice little push higher. And you can trade all of this. And I probably wouldn't even hold it overnight, but you could. You really could. So here we go. That is how we would chart this motive wave. 1, 2, 3, 4, 5. And when you get impulse waves of decreasing height, you've always got to draw it. You've got to draw it. This is what characterizes wedges. And so, like, when you get people just charting wedges all over the place or connecting any two highs and saying wedge, it drives me nuts because there's actually, like, some theory here to be adhered to. Okay, and this isn't very pronounced, right? But you do have a pennant through here. I say pennant because of how short the time frame is, and you don't even have all the touches. 1, 2, 3, 4, 5. Oh, you do have 5 touch points with a partial decline. That's kind of cool. A, B, C, D, E. It breaks out to the upside. But anyway, so that again, this is how you're going to correctly find these chart patterns, is by using Elliott waveform analysis. Okay, so what happened here? We had 1, 2, 3, 4, and we can finally put 5 down. Yeah, I'm sorry if you can hear the mower outside. It's not ideal. And so the next push up is corrective, and the only rule for the wave is that it can't completely retrace wave 1. So I'm just going to take this up here and say, hey, is this high below the high we started at? Yeah, it is. So we're just going to edit this guy and say 2. Pretty sweet, right? Now let's take it. This took a long time. I don't want to do the entire wave. That's insane, right? I think it might be fun, though, to try to get through this 3 wave, this 3rd wave extension through here. This looks like it could be really beneficial, really good. So let's keep going. So we had a high here at 2, and let's be very clear that corrective modes happen in 3 waves. All right, and there you go. And let's see if we got a clean measured move up through here. This is another Bulkowski chart pattern analysis thing. So this is rough. This is dirty, but yeah, you definitely met your target in that move. So 1, 2, and 3 for 2, and now we're going to start counting the waves down. Because we had a 3-wave push higher and a 5-wave push lower, we can be pretty sure this is also going to be a motive wave heading lower. And, just for fun, let's drop a Fibonacci extension from the bottom of our motive wave to the top of our first. Geez, that mower is so loud. It's so annoying. Edit properties. Let's do this down to the penny. What was the high at this candle? 1369. Okay, 1369. And then let's find the low. And I can't see the box. There we go. And the low is 1230. Okay, yep, nailed it. And the only thing I want on is 161.8. And hit OK. So again, I'm just measuring the height of this motive wave, and I'm projecting the 161.8% retracement level. And we do reach that eventually at 829. We're going to see whether or not the 3rd wave extension accurately reflects the end of the motive wave at that point. So let's go. Let's just start. This is looking like, is this within the last 10 days? No, it's not. I'd kind of like to get a little closer of a time frame because this is going to be difficult. But here I can see a push down. And then, that is nuts. 1, is this 2 and 3, 4, 5? And then, let's see here. Let's take another look at our other chart drawings here. So yeah, you see that too. It's right there. And I said this is the bottom of 3. Really? Am I even charting the right wave extension I wanted to? I guess so, right? Because we had that full motive wave. Broke that down. 1, 2. Yeah, this is the third wave extension. 3, 4. Ah, yeah. And what's I'm like, I'm thinking that this should be going lower faster because, you know, that first wave was so tall. Wave 3 should be longer, right? And it's not. So again, we're having that discussion where it's like, well, then wave 5 needs to be even shorter than wave 3, and it was. So let's go ahead and break that down. So, I mean, you can call this 1, 2, 3, 4, 5. I think that's fair to say because wave 5 is probably going to overthrow, which is true. 3, 4, 5. Yeah, that's a wicked. This is a wicked wave. It's just brutal because it's pretty flat. So we're gonna say that's push 1 down, that red candle, and this is nuts, but sometimes you gotta say, yeah, 2 is like a teeny little bounce, right? I mean, really, you know, we could say 1 and 2. We could drag it down here, try to get a little more convenient. Let's see, can I just like select it? Thank you. And say, okay, that's better, right? Maybe 1, 2, 3, duplicate, and pull this over. And again, a little overthrow there. But of course, it's on a 3. 3 and 5, they like to overthrow. And what's RSI doing? RSI is oversold. All right. Just like it did back here at this other 3. Amazing. Incredible. And overbought actually at the top of the corrective wave. So extremes of RSI at extremes of their waves, which is great. And you can get into like, you can really get into this because this push in the RSI, this push from like exactly oversold to just overbought, like this is just a corrective. It's like perfect. And what's super cool is like sometimes the RSI has chart patterns too, right? Like you could probably say that's corrective. Okay, that's not important. Let's keep going. 1, 2, 3, and 3 was short for. Here's the problem. Here's the problem is we're gonna have that issue again where wave 3 is too short. So let's break this down. This better not mess up my analysis. And I don't want this to be purple. If this could just be yellow. Thank you. 2, 3, and then wave 5 would be larger. And wave 3 can't be the shortest, right? But that's why I'm thinking wave 1 has to be up here. Like wave 1's just gotta be like that single candle and then this really rough little bounce. Then it makes sense because wave 3 is no longer the shortest wave. It's like, really? Do you want, like, I mean, yeah, you gotta do what you gotta do. Big push down, little push up. There's even a little tiny consolidation through here. Let's get into it. Let's actually go to, let's go to a 1-minute chart. And I'm gonna need more than 10 days. I think I'm gonna need like 20 days of 1 minute time frame, which is kind of dumb, but let's just go. Ooh, yes, there it is. And on the 1 minute time frame, yes, it makes more sense. It makes way more sense. You can just, you can see it, right? There is a pennant through here, and this is a consolidation. So 1, 2 is a triangle, and it comes out to here probably. And then 3 needs to start. And we're going to break it down even more. Let's break down this third subwave. Woo! This is called fractaling. How do you feel? How do you feel? We're going in. So, what is this? This wave is, it's at the bottom tier, and it's got to be the middle. So that's a minor. So let's go ahead and do our next sub tier. It's going to be the top of sub minuet, minute. So minute, because those are minor. So minute, yeah, minute, and the minute wave is going to be circle and 1. There we go. And it's at the top of its tier, the sub tier, so it's going to be white. And let's go ahead and duplicate. 1, 2, So, okay, I should have explained that. So I'm looking for another motive wave heading lower, right? So the first thing I see is we have a breakout, and I'm gonna just start. See, like this did look really bad on the time frame we were on, right? And then we had to go into the 1 minute, which is why you gotta look at lots of time frames, even the small ones. Yes, this is also a demonstration that you can use Elliott chart pattern analysis on these really small time frames, and that's why I'm like, you can forgo the time frames for Bukowski's chart patterns if you're smart, if you know exactly what you're looking at, but I don't recommend it. Of course, we are fitting within a channel here as we are moving down through a motive wave, but we're going to see this as a consolidation pattern for 2, breaking down, pulling back up, throwing back down. Okay, see, this chart pattern analysis becomes unproductive at this point. And so I just choose to draw it like this. This is where that pattern of consolidation ended, and we had our downward breakout. And this was the correct move. Yes, we did get a pull back up into the range of the pattern, but then we continued downward. And so this hurts post-breakout performance. These kinds of returns to patterns post-breakout hurts performance. So we're going to keep that in mind, of course. So we have a push down, a push up, and this corrective bounce did not fully retrace the push down, so it qualifies as a second wave. And now we're going to find a third wave, and oh my goodness, am I looking at another motive wave? Are we gonna subdivide one more time? Yes, we are, and we're gonna do it with ease. Let's start a third extension of a third extension of a third extension. Is that the right number of third extensions? Is your head spinning yet? Is anybody even still watching this? This is what I do. This is how it goes. It's just like a running train of thought, and it never ends. Nope. It just keeps going and going, and for some reason it's relaxing. And at this point, I'm just going to be like, dropping these down. You can see that this third minuet wave, it's longer than the first wave, so I don't have to worry about its length. Let's see if I duplicate this and say, hey, can this be wave 4? The answer is yes, it can, because it didn't move into the range of the first wave. 4, and then we're looking for 5. Jeez. Okay, so how do we handle this? How are we going to say that's all 5 wave? Well, we can subdivide one more time. Let's do it. Let's look at this. Wow, we are getting to the down and dirty here. So what's the high at this candle? 1259. What's the high at this candle? 1259. Does that break the 2 rule? That's the thing, is it gets really hard when you get this low. 1. I'm just going to do it. 2. Yeah. I mean, why not? In fact, you know what? There's no question about it. 4, 1, 2. Good. Next. 1, 2, 3, 4, 5. And look at this. Look at this. The top of that wave 4 and that bottom of wave 1. Look at that. Oh my God. There's one layer. There's one layer below this layer. Okay. That's the fractal. So we won't go into that layer, but into that subdivision. But let's just keep going here. So, and then we've got a big wave 3. Wave 3 is typically the longest wave. Wave 4, I'm just going to drop these down now. And check this out. Once again, you're going to have wave 4. Good. There's no overlap there between the first and the fourth waves. And sure enough, 5 actually truncates. That's a 5. That's a 5th wave truncation right there. So we'll just drop that down right here. We'll be like 5. Can I find 5 waves through here? Is that the question? Let's see here. My brain asked me that just now. Let's see. A high at 1254 and then a high at 12. So 1, 2, 3, 4 into this hammer, and then 5. Yes. Yes, the motive wave subdivisions continue to make sense even within the intra-minute. So, whatever. Who cares? This is a corrective bounce. A, B, C, and then we've got after hours, and it's like, what? So let's zoom out. Let's try to figure out where we are anymore. So 1, 2, and then we had 3. We had 3 of 3. 1, 2, 3, 4, 5. So, okay, wow, this is so confusing. 1, 2, And then 3. Yep. So, yes. Yes. Let's go. Oh, man. So then this is 3. And this is like a corrective flat that expands probably towards the end. So, like, you get 5 here and then A, B, C. And this becomes 4. And this A, B, and C, this is actually on the this is on the sub-minuet level. This stupid expanding freaking I hate these corrective waves. Like, which way's the price gonna go? That's new low, that's new high. I don't know. Okay, so 1, 2, 3, A, B, C for 4. And of course, you can see by my cursor that wave 1 and wave 4 don't overlap, but wave 4 did come up here, and it tried to... See, that's the thing, is wave 4 likes to come up to wave 1. And then we start wave 5. Okay. Uh-oh. So this is where I start to see that I have a wave 3 over here, and it's possible that's actually a 5 wave. It's possible that's actually a 5 wave. And it's okay because it's still motive. As long as it's still motive, the counts don't necessarily break. But what it does do is it makes me say, okay, if this is actually the end of a 5 wave, I need to go into my chart of 1 of my degrees higher and say, oh, that makes sense actually, because, are you ready for this? If you follow this, congratulations. You have, wow, what is this? Okay, it's got to be a minor wave 5, and it is completing a motive wave of 1 degree higher, which is an intermediate wave 3. Boom! Yes! 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 This is so exciting because I didn't... This is all live analysis. Well, you know, as live as it gets for recording. I did not break down the chart into these levels beforehand. I just did this bigger one. And then, you know, if it's true, if the count is correct, then it will continue to subdivide and make sense, which it did. So, proof of thesis. Okay, and so then 5, and that completes that 3rd wave extension. And then we move into a 4 wave, and of course, you know, you're probably going to notice there's like, I don't know, some sort of triangle or something through here. Not a big deal. Okay, so that was crazy. And then, oh, wow, look at that big jump. Nice. That's really all I wanted to go through. That was a lot of energy. Not going to lie. 1, 2, 3, 4, 5, which is 1, 2, and then we have 1, 2, and then you have 3, 4, 5. You have another extensions. Insane, right? It's crazy. Elliott wave analysis is nuts, but if you do it correctly, it will reveal which way the price is moving. And so when I look at this chart, let me back out, and I know American Eagle Outfitters has earnings today, and we do see the price riding here. I think we're going to come to at least this 1182-ish level to complete this measured move up. And then at that point, you know, it could be anything. It could really be anything. In fact, do you know what I like to see? This is the thing, is I'm really bearish on the markets, but sometimes I see bullish things, and so it's possible that we're actually going to go and bounce for a bit, which makes sense, you know. This could be some really messed up diamond. Like, really messed up. I mean, this thing got freaking squished. I don't know what, but, you know, you've got an expanding pattern and a contracting pattern back to back. Yeah, I'd call it a diamond. No, it's not pretty. Doesn't matter. Maybe if I change the aspect ratio to look a little better. But, you know, this is kind of how diamonds always look. They always look a little, you know, disjointed. Let's see if I can clean it up a little bit. Yeah, it cleans nicely. It cleans up a little nicely. Let me show you the page Bukowski has on diamonds. And let's see here. Diamond bottom. Let's see here. I don't need to go into this right now, but they usually look weird. This one's really clean, actually. So that's what I've got for today. Yeah, that's ugly. That is so ugly. Maybe I'm drawing it wrong. Let me fix it. Yes. Yep. Okay. That looks better. It's still ugly. Nonetheless, that's what I've got for this video today. It's super long. Congratulations, you've made it to the end. If you're not convinced to join Capvision yet, I don't know what will. This is probably the most powerful form of analysis out there. That's all. That's a wrap. Happy trading.